Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets slipped from record highs led by gains in the banking stock. Sensex trades about 37,700. Nifty flirts with 11,400. HDFC AMC lists at the 65% premium. CEO Milind Barve says it's a systematic investment plan that's helped the company become the largest equity asset manager. Heinz is said to have narrowed down on Tata Global Beverages and Dabur to sell its India portfolio. That's a Bloomberg exclusive. Donald Trump says the United States has an upper hand in the trade war with China, even as the Asian nation imposes fresh tariff on American imports. All right, quick check on how the markets are faring at this juncture. After what has been a record rally, you did see some weakness creep in at the benchmark indices. Take a look at where the Sensex and the Nifty are trading at this juncture. The Nifty is trading at about 0.25% up in the green, about 11,392. The Sensex is up about 0.5% as well. Good going on the Bank Nifty. Bank stocks have been leading this rally over the last couple of sessions. Even on Friday, you are seeing the mid-cap and the small-cap index also trading in the green at this juncture. Quick check on some of the leading gainers in trade today. More importantly, as I mentioned, the banking stocks have been the key drivers. ICICI up about 3.5%, Axis up about 4.5%, UPL on the back of the deal is up about 3%. State Bank of India is also leading the rally. Most of these are huge contributors on the index. 2.5% up on State Bank of India. Bharti Airtel is about 2.5% up in the green at 383. Coal India is doing well for itself. So it's been a broad-based rally. You're seeing across the small cap and the mid cap universe as well. Some stocks that have taken it on the chin. Unilever is seeing some profit booking, 2% lower on Unilever. Kotak Mahindra Bank down about 2.25%, and GAIL also down about 1.5%. But all eyes really on that IPO of HDFC AMC that listed a 65% premium to its issue price. That was even higher than what the markets were pricing it. Remember, the IPO was subscribed nearly 83 times. Somit is standing by to tell us how HDFC AMC stacks up with its only listed peer really, that's Reliance Nippon Asset Management after today's surge. Somit.
Well, it was a bumper listing for HDFC AMC. It listed at a premium of more than 60% to the issue price of 1100 rupees. As you can see, it is now trading at a 64% higher compared to the issue price of 1100 rupees for HDFC AMC. Now, when you compare HDFC AMC with Reliance Nippon, that is the only listed asset management company in India, the market capitalization of HDFC AMC, as you can see here, it's close to 38,000 crore rupees. That is more than 2.4 times the market capitalization of Reliance Nippon Asset Management Company. In fact, Reliance Nippon's asset management company's market capitalization is equal to the market cap that HDFC AMC has alone added today. A 64% upside means they have added close to 16,000 crore in market cap, which is equal to the market capitalization of Reliance Nippon. Now, if you see the valuations, and they're also trading at a premium. Now, the market capitalization as a percentage of AUM. Now, AUM as of FY18 was close to 3,07,600 crore rupees, and market cap as a percentage of AUM now is at around 12.4%, which is nearly 3 times that of Reliance Nippon. The AUM of Reliance Nippon is close to 4,07,000 crore rupees, and market cap as a percentage of AUM for Reliance Nippon is close to 3.9. In terms of PE also, if you see, it is at HDFC AMC is trading at a 73% premium to the Reliance Nippon's price to earnings as of FY18. Lastly, what is the value of the shares that is owned by the top management of HDFC AMC? Now, Milind Barve's share value is close to 211 crore rupees post this bumper listing, while that of Prashant Jain is now valued at 167 crore rupees. Shobhit Mehta's shares are valued at close to 67 crore rupees, while that of Chirag Setalwad is valued at close to 61 crore rupees post the bumper listing that we saw today.
Fabulous that. Samit, thank you for that. That HDFC AMC. Yatin, in fact, spoke to Milind Barve, Managing Director at HDFC AMC, to find out about the company's growth plans, trends in the mutual fund industry. Listen in.
I think what this industry has seen consistently over the last many years now, at least 4 years clearly, has been a distinct change in the way retail investors are behaving in terms of their financial saving habits. Right. First, there's a shift from physical to financial. Within that, people within financial assets are choosing more about products like mutual funds and insurance in addition to bank deposit. So I think there has been this behavioral change, and that's opened up a huge pool of higher sort of savings pool that is now being available now, and that is finding its way into mutual fund products. And I think it's a very good trend, and I think the industry will continue to benefit from this.
Okay, sir, talking about the industry, what kind of trends are you looking at in the SIP or the systematic investment plans? And do you think India has been low penetrated versus other global peers in terms of the mutual fund industry?
Yeah.
So do you think SIP is that instrument probably which will aid the penetration?
Yes, I think SIP has emerged as a most powerful tool in the penetration of mutual funds, and in fact I would say the inclusion of people into financial sort of savings. The SIP is an incredibly wonderful way. It's a very small ticket single investment. The average is as below 4,000.
Okay.
People are investing, mind you, for not just a couple of years, but people are committing money for 10 years and sometimes even longer than that. So I think the SIP has become, it's also a very simple way of investing. You're not committing a large amount. You're not timing the market.
Right.
It is more about developing a good habit to invest. And I think the industry is now collecting over 7,500 crores just from SIP every month.
Okay.
And that number is growing every month.
Okay.
So I think that has helped the industry to penetrate into newer markets, and it's also helped the industry to acquire new customers.
Okay.
Because the new customer is not committing a large amount. He's only committing to invest an average amount of 3,500 rupees per month for a number of months in the future.
Okay. And sir, talking about the 7,500 crore monthly inflow that you were talking about, if you could tell us what kind of a market share does HDFC AMC have? And in terms of the mix, if you could tell us how really is the mix shaping up for HDFC AMC in terms of equity, SIP, debt, funds, if you could just give us a breakup on all these fronts.
So the market share in SIP is not published, so
Okay.
one can't. We hope that we are amongst the leaders in the systematic investing business.
Okay. But in terms of
if you look at the AUM of the industry, which is the most important way to look at it, we are the two things. We have about half or 51% of our AUM, which is in equity-oriented products.
Okay.
So that's firstly very important, and we have the #1 market share in equity assets under management.
Okay.
That makes us the leader in equity managing. In fact, we are, I think, the country's second largest institutional investors, second to LIC, of course.
Okay. And sir, one final question in terms of the overall, product mix, overall growth prospects. Do you think the kind of run rate that the industry has seen in the past few months, especially after demonetization, that kind of run rate for the mutual fund industry would, probably continue? I don't know the guidance, but in terms of the growth rates, in terms of the opportunity for companies like HDFC AMC, do you think this is a sustainable, growth path in the next, 5 to 6 years?
Well, I've been in this business for many years now, and I recall for years till 2013-14, if we collected as an industry 15 or 18,000 crores in a year, we said this was a good year.
Okay.
And now we are collecting 10, 11,000, 14,000, somewhere in that region per month. And that's the kind of run rate that we are currently looking at. So I think it's a complete change in the way, as I mentioned earlier, that the level of flows that we are reaching. And I think this is just in some sense the beginning of people understanding mutual fund products and then having acceptance of the products going forward.
Milind Barve from HDFC. It's been a spectacular listing so far, at least. Gold, meanwhile, has plunged to the lowest level in more than a year, but the weakness may not continue much longer. ICBC Standard Bank believes that the gold prices to climb back to 1,300 an ounce by December. Swansea of Bloomberg News is here with more details on this one. Explain to us what's likely to happen. What's their view on gold and why this bullishness?
Yeah, you have seen gold losing appeal this year because, upbeat outlook of the US economy that's boosted dollar in the past. But analysts expect that gold is now at a bottom, and you can see it inching up towards the end of the year, as you said, to $1,300 because you will see physical demand emerging at lower levels. Plus, the further rate hikes by the US have almost been priced in by the market. So that's going to kind of help the market move up from here as such.
Where is investor interest? Is it in physical gold, ETFs? How is it going to play out?
I mean, ETFs, you're already seeing some kind of inflows coming in from Europe and other countries. But physical demand is what could help underpin prices going forward. And that's supposed to come in now with the second half of the year, where festive season buying in India and China, you can see.
Does this tie in with what the World Gold Council has been saying?
Yes, World Gold Council has been saying that second half of the year is always a good period for demand, and that's what they're expecting with monsoon and the prices being low, that could help underpin demand as well.
So once again, many thanks indeed. That's gold. Expect the price to go up is one view. Jewelry demand may also rise with revival in gold prices. Tyson's jewelry arm Tanishq targets 20% growth in fiscal 19. CFO Subbu Subramaniam told Bloomberg Quint there's good traction in the studded jewelry segment. Listen in.
Golden Harvest has been doing well. It's contributing about 18+% now. This year, I think we should target something like a 20% growth or so. A contribution from Golden Harvest. So that traction is perfectly fine. There's no problem with that.
Right, and if you look at the Tanishq brand, it saw a slight dip in this quarter. Now, given that there's a turnaround in the demand as well, do you think the growth to pick up as we've seen in the other previous quarters also?
The brand, what do you mean? Yeah, I mean, Tanishq is our jewelry, right? And therefore, I think when we grew at 6% or so, that's because of the base effect. And hopefully now it should grow at 25% for the next 3 quarters. So I do believe that overall for the year, we would be hopefully in excess of 20%.
What kind of traction are you seeing in the premium category?
High value gold diamond studded jewelry doing well for us. This activation so far, I think Gulnaz has been the new collection that we launched has been quite a success. And this is between 3 to 10 lakhs price range. So that's a good sign. Wedding jewelry, also higher ticket size, is starting to gain traction. So higher value, yes, I think it's doing well. Having said that, I think we are still at about 75,000+ in terms of ticket size this year, because we've also introduced a lot of diamonds at a low price point in Tanishq. So it's sort of balancing out each other. So we may not have an overall significant increase in ticket size. Having said that, I think the segments we have been concentrating on, which is both wedding jewelry and high value studded, are doing quite well.
Okay, that's the management of Titan Tanishq. Heinz, meanwhile, is said to have narrowed down on Tata Global Beverages and Dabur to sell its brands in India. There is a hitch, though. None of these interested players are willing to shell out $1 billion for brands like Complan and Nycil talcum powder. PR Sanjay from Bloomberg News is here with more details. So this is an interesting time. There is Complan on sale. Glaxo's also put on Horlicks on sale. What's going on?
This is the second round of bidding. So where the first round of bidding has already happened, and many of them actually pulled out of the race because they're asking for the moon, and these companies, these buyers are not willing to shell out that kind of money. So in the second round, Tata Global Beverages, which would want to enhance their healthcare drinks portfolio, are keen, and Dabur, which is also looking to enhance their healthcare nutrition drinks portfolio, are also looking. And there's a surprise bidder, which is Cadila Healthcare, is also looking at, but we are not sure that whether this will extend for one more round of bidding, because the seller really wanted more players to get in, and they're looking at a better price. But existing bidders are not willing to shell out this kind of money. The reason, as you rightly pointed out, Glaxo is also in the market, where Horlicks is on the block, and Horlicks and the associated nutrition brands are all looking for a potential sale, while Complan, Sampriti, Nycil and Glucon-D, they are also looking in the market for this kind of stuff.
So all these are part of Heinz's portfolio that's out on sale, or?
The certain products, one is Complan, one is Glucon-D, one is Nycil, and one is Sampriti. So these 4 brands are on sale, and in the case of Horlicks and Boost and one more, three products are on the block. Now 2 big brands, 2 big companies have put their leading brands really, on the block, and India is one of the key market for both of the brands. And of course, Indian players are very keen, but the ask is big.
Sanjay, thank you so much for that. Interesting development in the health drink space, really. Both Complan and Horlicks are now on sale. Heinz is expecting $1 billion from this sale. The National Company Law Tribunal, meanwhile, has allowed bidders to submit unconditional bid for Bhushan Power and Steel till the 13th of August. Remember, this move comes after Tata Steel challenged the NCLT order extending the deadline for bids. Arpan Chaturvedi joins us with more details on this one. Arpan, so does this give others like Liberty House and GSW another window to try and outbid Tata Steel?
That's right, Harsha. So what the NCLT in this order today has said that the deadline which was supposed to expire today, they have extended that deadline by another week, which is 13th of August. And there's been one caveat by the NCLT that all these bids, the revised bids which will be submitted by all three players, which is Tata Steel, Liberty House and JSW Steel, these have to be unconditional bids. Now remember, there's also a separate proceeding going on in the Supreme Court where the Tata Steel had approached the Supreme Court seeking a stay on the NCLT order, but that time the Supreme Court had refused for an interim stay. But that hearing will also be coming up on August 10th, so it will be interesting to see what course of action that particular litigation in the Supreme Court takes. As far as the NCLT case is concerned, you're right that now all three players can submit their revised bids, and the next date of hearing in the case, which is at the NCLT, that will come up on the August 17th after the Supreme Court hears the matter on August 10th.
Arpan, thank you so much for that. Let's talk about Jet Airways now. Jet Airways is down for the second day in a row. Investors don't seem too convinced with the management's assurances on the financial conditions of the company. Remember, rising costs, aging fleet, and a prospect of running a full-service airline have collectively taken a toll on the company. But aviation sector veteran and former Air India director Jitendra Bhargav says it's a rat race between airlines to offer the lowest fare, and that's actually taken a toll on the sector as a whole. Listen in.
There is a body called the Federation of Indian Airlines. Now, there is no reason why that body cannot play a role and say, look, it's suicidal for all airlines. Somebody will get it in now, somebody 6 months later, 1 year later. Be mature. You have international examples in front of you that many airlines go under when you get into a mad rat race. Don't get into it, behave maturely, ultimately survival. Now, why would a person like an airline be immature to the extent that I'm not looking 2 years from now? I'm looking at today to protect my market share. So I'm very, very sanguine. You can't look at government. Government could have said, okay, airport charges, we can reduce it a little. ATF sale tax can go down a little. It'll only give you marginal relief. At the end of the day, what matters is at what rate am I selling tickets?
Okay, that's the central point of
India is a price-sensitive market. People would lap it, the lowest thing. But question is, how low can you get?
Jet Airways and the battle in the aviation sector. Meanwhile, the worst may be over for India's bond market. At least Standard Chartered and Nomura seem to think so. The expectation that the RBI will stay on hold for the rest of the year may have improved sentiment. Shubhadeep Sarkar from Bloomberg News now joins us. Shubhadeep, you've been speaking to debt investors. What's the sense that you're getting, particularly after the policy?
Well, Harsha, two things seem to have crystallized after the policy on last week. One is that the investors now are more convinced that the rate hike cycle will be a shallow one or maybe an extended pause from now onwards. So at the most, one more hike by the end of the financial year. That's what the street expectations are. And the second thing is the assurance on liquidity, which Deputy Governor Viral Acharya provided in the post-policy press conference, where he said that adequate systemic liquidity will be maintained. The market is obviously interpreting it as that the RBI will be conducting more OMO operations for the rest of the financial year. So these two things have kind of put some stability in the bond market. And also, if we see Nomura and Stanchart both are now scaling back into bonds. Stanchart has moved its 3-month outlook from neutral to positive. Nomura is also advising investors to go long on the 5-year bond and go buy the 2020 bond. So what in a sense means that it's still a cautious view. I mean, because we still don't know where oil is headed. It's stabilized for now, but oil obviously remains a key jack in the box.
I was just going to ask you, is the fiscal risk has not gone away really?
That's not gone away really. So it's a more a cautious kind of stance, but some matrices, if we look at a couple of matrices of which bond market traders typically look at, one is the difference between the repo rate and the 10-year yield, which basically is still quite high. It's about 125, 126 basis points as against a 5-year historic average of 75 basis points. So that means more hikes are already baked in the price. So it's not that sentiments can worsen from here on account of RBI. And the other thing is that foreigners have turned buyers for the first time in July after 4 or 5 months.
You're seeing that on the debt side as well?
On the debt side. Yep. They've turned buyers on the debt side. And also state-run banks have made a return to the market. For the last couple of months, they have been net buyers. So these things all put together seem to suggest that there's some stability in the bond market. Though I might add that the cautious stance still remains and markets are not overtly optimistic at this point of time.
Some respite for the bond markets. Shubhadeep, thank you so much indeed for joining us. President Donald Trump defended his use of tariffs that have inflamed tensions with China and Europe, telling an audience of supporters on Saturday that playing hardball on trade is, and I quote, my thing. Tom McKenzie of Bloomberg News reports.
Big week for China data, and as you say, President Trump coming out of the weekend at this rally in Ohio, but also in a series of tweets really trying to underscore his view that tariffs and the actions that he's taken give the US leverage, and saying that he thinks that it is going to win, certainly in the longer term, and is going to open up China's economy. And he pointed for the first time to the impact on China's markets as well, the weakness in the equities, saying that this gives the US leverage as well. Take a listen to what some of President Trump's comments were at this Ohio rally over the weekend.
They've taken $500 billion a year for many years. $500 billion. We have really rebuilt China. And it's time that we rebuild our own country now.
So yes, China very much back in focus for President Trump over the weekend. Of course, last week we had those reports out of Washington that they were indeed considering raising the level of tariffs on potentially the next round of $200 billion worth of Chinese goods that would be hit by tariffs from 10% to 25%. And of course, we also heard that potentially there were talks going on in the background, at least among lower level officials from the Treasury Secretary's team and Liu He, of course, the vice premier here in China. But for the moment, the rhetoric is remaining very strong on both sides, and of course, actions as well, with China unveiling this list late on Friday of an additional $60 billion worth of US goods that could be hit by tariffs in a retaliatory fashion from Beijing.
Yeah, Tom, to that point, what do we know about Beijing's latest response?
So this adds on the $50 billion that they've already outlined. Of course, they have hit back with $34 billion in this initial round of US-China tariffs. We're expecting potentially that the US is going to go ahead with this further $16 billion, and China would then match it. Now, China has outlined this list for $60 billion worth of goods that would be hit if the US goes ahead with these $200 billion that they've outlined. We're looking at tariffs ranging from 5 to 25% on about 5,000 different US categories of products. So the higher end of the tariffs are going to target products like meat, like wheat, but also, crucially, LNG. It's the first time liquefied natural gas has been thrown into the equation. This additional list outlined by China doesn't really do much to add further pain to the US agricultural sector, according to the analysts. But in terms of LNG, there is an impact there, and we saw some of those players in the US markets falling on the back of this news. So that is one to watch. Again, China has said it will not be bullied, it will not be blackmailed, and as you've been discussing with Heidi, we've been waiting to hear some clarity from China as to how they plan to respond if these $200 billion worth of tariffs are put in place by the US. We got a few more details on Friday. Now, of course, we're looking to see what happens with this consultation period in Washington towards the end of August, and then, of course, end of August, early September is when you could get these additional $200 billion worth of US tariffs imposed, and then we're going to see this retaliatory measures and steps from Beijing.
Tom McKenzie reporting from Shanghai. What does this mean for India? India, meanwhile, has deferred imposing retaliatory tariff on some US imports, keeping the door open for a possible truce. The tariffs were supposed to come into effect yesterday, but has been postponed for a month. Vrishti Beniwal of Bloomberg News now joins us with more details. Vrishti, so what's the tactic here? What was supposed to be imposed, and why has it been deferred?
So, Harsha, India has decided to defer retaliatory tariffs on US products by 45 days. This clearly shows the two sides are trying to avoid a trade war between them. Earlier, India had announced it will have tariffs on US products, mainly chickpeas, apples, walnuts, and Bengal gram, and these were supposed to come into effect on August 4, but the new effective date is September 18. So, this follows a meeting between two sides where officials from both India and US met, and then India came to this conclusion that it will be better to wait for some time rather than going for implementation of the tariffs right now. And when India announced it will have tariffs on US products, it was in answer to US imposing tariffs on imports from many countries, including India, which hurt steel and aluminium exporters from India. So the recent move clearly shows the two sides are trying to reach a truce. Thank you.
Thank you so much for that. That's Ruchti Beniwal reporting from Bloomberg News on what India is likely to do on potential retaliatory tariff on the United States. Finally on the show, the world's largest elevator in China, which can lift a ship 40 stories high in just 10 minutes, may lose that title very soon. Check out why. Out of time on the show. Thank you so much for joining us today.